have Metallicus' very own Marshall Hayner and DaLand CUSO's very own Jon Ungerland. They are here talking about their new partnership that empowers credit unions to offer regulated stablecoins and digital asset services. If this is one conversation you want to listen to about the future of credit unions, this is the one, so check it out. Mike Lawson here with CU Broadcast. Welcome back to our show. And on today's program, as you can see, we have a couple of fine gentlemen here representing the fintech industry and how they're helping out credit unions these days. And it's going to be a good one today. So I can't wait to start the conversation. But let's do some introductions rather. Right below us, we have Metallicus' very own Marshall Hayner. Marshall, how are you, sir?
Doing very well. Thanks for having me on, Mike.
You are welcome. Good to see you again. And then right next to me, Mr. Jon Ungerland from DaLand CUSO. Jon, how are you, sir? Good to see you again as well.
Doing well, Michael. Glad to be here with you today.
Indeed. Well, we have quite the topic here because your two organizations have just embarked on a new partnership that helps credit unions kind of empowers credit unions to offer regulated stablecoins and digital asset services. So really very timely topic because stablecoin is like the hot topic in the industry right now. So you guys are spot on with this partnership. So Marshall, I'm going to start with you real quickly here, and then obviously Jon, you can chime in as well. But can you give us a quick overview of this new partnership? Tell us from the Metallicus perspective, and then Jon, I'll let you give us the DaLand perspective.
Yeah, absolutely. So Jon and I met through the credit union space, and we've been working for a while now on this product to launch stable coins and institutional custody and trading for credit unions. Okay. And through that process, we started to become acquainted with the other players, the other CUSOs in the space. And we discovered DaLand through St. Cloud Credit Union, and we were really impressed. You know, we saw that there was a potential to integrate directly with the credit unions, and not only the credit unions, banks and other institutions as well. But as you know, with Metallicus, our focus has been on the credit unions, and we seek to integrate the decentralized financial world in a safe and compliant way. Yep. And so, you know, that was something that brought us together. We're also big Bitcoin, Dogecoin guys, so we, you know, go way back with that. And we really hit it off when we met. You know, that not only do we share a lot of the same vision, but also we're working on the same technology. And I think that's one of the things that's held back the institutional adoption is the integration of the institutions. And credit unions I see as a great way to bring it back to the community. Credit unions are nonprofit. Obviously, this is CU Broadcast, so the listeners know all about credit unions. But I think that it's important to empower our communities, small business, and that's really kind of the ethos of the credit union. And when it comes to blockchain, there's incredible opportunity, but you know, it has to be done right. Yep. It has to be done safely. It has to be friendly. And I think one of the problems that's really plagued our industry is not having those tools. And so when, you know, we discovered DaLand, we said this could be a great partnership because they have the same vision, they come from the same mindset, and we're actively working to build this product where you can your credit union, you can deposit some Bitcoin, you can buy some crypto, and if you want to withdraw or deposit stablecoin to your checking account, you can do that. And so that's really the vision, you know, and to have a safe environment to do it.
Yeah, you guys are really looking for the future because this is what's attracting the younger members, which is what credit unions really need, is to get their membership younger. You guys know that all too well. So Jon, I'm going to get the DaLand perspective here as well because you guys are definitely on the right track here.
Yeah, from our side, what is extremely exciting about this partnership is that we're not a blockchain company and we're not a stablecoin company. DaLand is a 15-year-old organization that has served credit unions all along the way, specifically around complex and important technology strategies. You might say how to get more out of their core and how to get a better return using their core technologies to stay relevant. So when we have been watching this space and building in this digital asset space going all the way back to about 2015 now, but in our mind, the digital assets ecosystem is diverse and developing. And so we had no intent of becoming a stablecoin provider or becoming a blockchain native company, but nonetheless, we see the importance of providing a gateway or a bridge for traditional financial institutions to tap into the very important world of digital assets. Currently $4 trillion in capital and growing, $4 trillion in market cap and growing. And obviously with regulatory developments and legislative movements, stablecoins are going to be an important part of the U.S. economy and the U.S. banking system. And so we thought it was really significant to find a partner that controlled their own destiny and had control of all the ingredients for offering a stablecoin to the credit union and banking market space. And we loved what Metallicus was doing on the stablecoin front and other with their blockchain and DEX capabilities. And we felt like they would be a great partner for us to help provide a doorway of stablecoins and other services to usher our clients into the broader world of digital assets. So our solution that we refer to as coin to core provides a gateway to the world of the whole and really makes digital asset data processing part of the native operations of a financial institution, so that they don't have to build expertise and train their resources in how to do the digital asset stuff, for lack of a better way of explaining it there, or for time's sake rather. But I want to give a simple way to integrate these new money types into what financial institutions are already doing for their communities, and do things like stop deposit bleed, help them retain membership, help them put digital assets to work in their community. And we know stablecoins like the ones supported by Metallicus are going to be an important part of that doorway that folks will walk through in that world of digital assets.
So I want to cut to the chase here, and Jon, I'm going to start with you on this one as well. So what does all this mean for credit union? Because we're really stepping into the future, which is here now. And so what does all this mean for credit unions from your perspective?
Yeah, when we engage with clients, we always start with education and seminars first to make sure that they understand what's going on in this space. We don't come at them and pitch technology or licenses and solutions. We want to converse and collaborate and educate. I think there's some misconceptions about the digital asset space that could be very dangerous to community financial institutions right now. It's not just your younger members who are embracing this technology. Actually, there's a substantial amount of data that we have seen and put our hands on that says that it's your high net worth, high deposit members who are exploring this asset class and looking for yield and looking for security and convenience and sovereignty of their wealth. So we've actually seen a significant, hockey-shaped curve in many of our clients, hockey stick-shaped curve of deposit option of services like Coinbase, Kraken, external wallets. And what that means is that, the way we talk about it is the dollar is morphing, right? It's the money is morphing and people's attitudes towards money is morphing. It's becoming de-institutionalized. A critical mass of people in the world are becoming very comfortable with the idea of storing and moving money without an institution. And what that means to us is if institutions don't find a way to maintain a place in the transaction stream or provide value in the world of digital assets, they'll be disintermediated from the money business, just like everybody else was disintermediated in the past when their business bumped up against the internet. And as credit union lifer and as somebody who's passionate about how local institutions serve their economies and communities, we don't see a need for, and we certainly don't want to see, local institutions be pushed out of the money business due to any number of factors. It doesn't need to happen. Yeah. There's an easy way for local financial institutions to provide value to their consumers in the era of digital assets, as long as they're willing to look at the facts about what consumers are doing already with digital assets.
Well, this sounds like, just on what you just said, Jon, it sounds like this is an opportunity and a threat. So to get your ducks in a row here for sure. So, and Marshall, same question to you. I want to get your perspective as well on what this means to credit unions, because Jon really laid it out nicely there, but I want to get your perspective as well.
Yeah, I think John really laid the foundation there. It's not just Gen Z. It's really all ages. But I think that especially there's something to be said. Gen Z and Gen Y, the younger generations, are very interested in crypto. But you have all ages. My grandfather has some crypto. My father has some crypto. So it's a multi-generational thing.
Yeah.
And I think that what's exciting about this is that we're democratizing finance. We're allowing people to do experiments that they've never, had before. And through that's really what's created what they call DeFi, or decentralized finance. And through that process, we've been able to access, borrowing and lending against digital assets. We've been able to access faster payments. When you think about the card payment network, for example, that's an antiquated system. That system goes back to the Sears charge card, when people would take a carbon copy of your card on a piece of paper. Now it's 2025. It's the digital age. And so faster payments are here. Now imagine what that means for business, not just locally, but internationally. Traditionally they were getting 3% all the way down. 3% at the wholesale side, 3% on the merchant side, consumer side. It takes some time to get the payment processed on the other end. Now with digital payments, with blockchain, you could not only do this locally, but you could do it internationally. You could make a payment to the other side of the world in an instant. And so that's, a big part of the game changer that I see. But also, I think that, we have a debt-based system. You look at credit cards, and unfortunately, a lot of things are predatory, right? Young people get these cards, they get in over their heads on the debt. And if you think about in the future, what would happen in a credit-based system? What would happen in a system where, instead of borrowing against money that you don't have, you borrow against the crypto that you do have or something? And that's really kind of the advent of decentralized finance. I think, what was missing in this was the compliance components, the digital identity, the anti-money laundering built into the blockchain technology itself. That was the piece that was needed to integrate with traditional financial services. That in the past, that was kind of, thrown to the side and, oh, don't worry about that, or that's anti-crypto. It's not, because, I think there's one camp of people that think that crypto should be this anonymous thing, or this, this other thing. And then there's another camp that I see, that's the camp that I'm in, which is the financial freedom camp, which is, I just want financial sovereignty. I just want financial freedom. I don't want the younger generations to be in debt. I want them to have opportunities. And that's what really crypto is all about. And so as we get into the regulated side of crypto, how can we make it safe? How can we make it easy to use? And that's where DaLand and Metallicus really come together.
Okay, I'm gonna skip ahead a couple of questions here, because my mind is just going in 100 different directions here. But the big goal here is, it's obviously setting your credit union up for the future, which is like tomorrow or today. But the other thing is it keeping the funds, keeping the money in the credit union ecosystem, because there's so many distractions, financial distractions out there. So is this part of the partnership too, to keep this money in the credit, or actually the member, no matter their age, whatever demographic, keep it in the credit union? Marshall, I see you nodding your head. Both of you guys are nodding your head.
Absolutely. And I think stablecoins is a big part of that. We recently got the clarity with the Genius Act and the Clarity Act, and now we have a pathway to do this. And so Metallicus was working for the past almost a decade now, trying to build this technology, and I think that we've succeeded in laying the foundations for it. When you, for example, when you buy some crypto with your credit union, with your bank account, what's happening? The money's coming out. It's going to a third party. It's going to a counterparty who's the seller of the crypto, and it's going to them, right? But traditionally, that money is flowing out of the credit union, it's flowing out of the bank. Now, what if it could stay in the bank? What if for every dollar of Bitcoin or Dogecoin or Metal or Ethereum or whatever crypto you're buying, it stayed inside the credit union? It grew the assets under management, and it also gave you a safe place to do it. Even in the future, you could imagine a credit union-based blockchain that has rules and capabilities that can give you the assurances that the credit union already has when you withdraw the cryptocurrency. So on their own blockchains even. And I see that as a future potential, but baby steps to get there. It's going to take some time. But I think that the most interesting aspect of this is that we can grow the credit unions and we can really empower the local communities, which are what credit unions are focused on. They're focused on their communities. And I think that's something in America that we need to get back to, empowering our local communities. And through growing the credit unions, there's just a huge movement with this. Yeah. This is going to empower our communities. It's going to empower the younger generation, older generations as well. And that's the vision. Initially, we looked at this and we said, well, how does this make sense? If every credit union has a stable coin, how do you have liquidity against, for example, Bitcoin? And the solution that Metallicus built was the metal dollar, which is an index basket where you could deposit, for example, one stable coin from one credit union and withdraw it to another. Now that allows instant transfer, and globally as that expands, that can enable remittances, all different types of financial flows. So I just see it as a big win. I don't want to see our money come out of the banking system, out of the credit union system, and go to other places. I want to see it grow. Yep. I'm not trying to shade at JP Morgan or anything like that, but I want to see our credit unions grow. I don't want to see one giant bank grow and then create practices that frankly are not good for us. I'm not saying, I'm not trying to point fingers at one or the other, but I am saying that I think that credit unions are the way. And that again, this is something that Jon and I really connected over. We have this vision of crypto, the credit unions, financial empowerment, and the tools are the critical part to make it happen.
Yeah, I just see it as a massive value add for credit unions and just setting themselves up for a very nice future. Jon, I'm going to get the same question to you here from your perspective. The big goal here, obviously keeping it in the credit union ecosystem. I want to get your take on this because you're front and center on this as well.
Yeah, that was very kind of Marshall not to throw shade at JP Morgan. So I'll be happy to throw a different S word at Jamie Dimon. I think there's very clear trends here. There's two trends that I would call out in particular to FI leaders, to credit union leaders, to local banking leaders. Number one is that, your high net worth and your younger members are experimenting in this asset class, or they're fully familiar with it at this point. They're frankly more literate in this asset class than most leadership teams at financial institutions. And there's a cycle here that's now about 10 years old and very worn into these networks, and we can see it. We don't have to engage in conjecture about it. We can measure it through different technologies that are available and through the data in these credit unions. People pull a little bit of money out of their deposit account, they buy some Bitcoin, they buy some other digital assets, they get gains and yield on that. And then the big question is, does that money ever come back to the local FI? And the answer historically is no, it does not. Why? Because through that experiment, the consumer has learned, the member has learned that they can now store and move money without a financial institution. And we're talking millions upon millions of people to the tunes of trillions of dollars have figured out this reality. So now there are inherent risks. There are FTXs, there are crappy external wallets, there are unregulated exchanges, and the consumers aren't always aware of the risks that they're assuming when they're expanding this space. What we see as very clear is that local FIs can have a clear value proposition to help members store and steward and use their digital assets. The local FI can become the best and most trustworthy digital asset wallet in the world and provide world-class service, which is not something that they're going to get elsewhere. Just try to get a hold of a human at these large online exchanges and service providers. Yep. The other thing that's happening, so first trend, money leaves, consumer learns, money doesn't come back. So we've got to provide them a reason to bring it back. Yep. And that's what our coin to core bridge and gateway does. I think the second point that Marshall's calling out about stablecoins is another very clear trend. Credit unions and local bankers need to be adopting and experimenting and preparing their own stablecoin offerings, because certainly if you just do basic AI searches, basic Google searches, you'll see that the larger financial institutions that would love to put local small institutions out of business have already built their own blockchain networks for faster, better, cheaper payments. And in the world of money data processing, of payments, of money movement, if your competitor can do something 1,000% cheaper than you, that's endgame. You're done. And what we know is that the large banks have already laid the foundations for their own stablecoin-based payment networks. And yeah, I'm sure they'll be happy to lease local financial institutions access to that at usurious rates. But the products like Metallicus and stablecoins and other global stablecoins out there is that these are open, decentralized technologies that credit unions and local financial institutions can use to their strategic advantage, and they don't have to be put out of business by or dependent upon or fleeced by these large banks and service providers anymore. They can take back control of payments, they can take back control of deposits, they can service digital wealth, they can generate revenues. Stablecoins are a great initial doorway to walk through into that house of digital assets. We see it as an important part of any local FI strategy at this point, and that's why we wanted to pursue and we're excited to announce this partnership with Metallicus. Let's put stablecoins at the core of the banking operation. Let's make it as easy to deal in stablecoins for your consumer and your operation as it is to deal in the electronic dollar. And let's take away the reasons that members have to leave institutions and deposit dollars, leave communities, and never come back. It's a wound that we shouldn't be leaving open to fester or suffering the pains of it, frankly, with the technology that's available to the industry through a partnership like this.
So based on what you guys just said, is this table stakes now? Because, a few years ago, this is kind of a fun thing to do, get involved with this type of stuff.
Well, look,
it sounds like it's going to be...
Great question. I personally believe it was table stakes about 5 years ago.
Oh, wow.
The reality is that earlier this month, Bitcoin as a single network, as a single digital asset class, eclipsed the entire asset size of the credit union industry.
Wow.
So let me restate that. The market cap of one token, measured in liquidity, not in asset size, the market cap of one token surpassed the total asset base of the entire credit union industry. And somehow the industry is still largely asleep at the wheel on this one.
Yeah.
So you're now dealing with a financial institution, a decentralized financial reality that's larger than an entire industry. I think, it's fair to call it table stakes at that point.
Okay, good. Okay, based on that, next steps for you guys. What's on the plate next? Marshall, I'll let you go first.
Yeah, so, I just want to throw in this one aspect, which is this is the perfect marriage because crypto has been kind of kept out of banking. Crypto companies were denied bank accounts, and you see this with the latest ruling under the current presidential administration that crypto companies and individuals holding digital assets were treated unfairly. You may have seen this news. Now we can finally be treated fairly, and I think we should put our money into the local credit unions and we should bring them back into our communities. And so that is it's the perfect, finally there is this opportunity to have banking services fairly, and let's put it into our communities. So I just wanted to add that. I think that's really important. There's trillions of dollars that are going to come in and they need a place to go, and they're going to leverage this technology with Metallicus and DaLand. And so what's next in my mind is really you're going to see the beginning of these integrations. You're going to see credit unions launching their own stable coins. You're going to see credit unions integrating DaLand coin to core and the ability to deposit your Bitcoin, your digital assets directly into the credit union, inside the credit union. It's gone are the days that you're going to have to transfer to a third-party service, wait a few days, maybe get held up. You're just going to log into your credit union, buy Bitcoin. Oh, you sold some at a profit and you want to get it into your checking account. It's already there because you're logged in, you're inside your checking account. So that's really the next step is you're going to see our companies launching our products. They're going to be live inside the credit unions. And now you're going to be able to do this stuff with your credit union. You'll have the trust and safety and soundness of the time-tested institutions, and you're also going to have a safe and secure environment to do it. I think that was a big problem in the past where you would see people getting involved in crypto and they would lose their money, they would do risky things, they would get hacked, and this technology allows them to avoid that entirely and to benefit from it while avoiding the risks and the pitfalls. And so what's next is really, you're not even going to probably realize in some cases that you're using cryptocurrency. It's going to be a sea change. When you look back 25 years ago at the dawn of the internet, at the beginning of mobile banking, I'm sure there were a few banks out there that said, no, this is not important. Let's not prioritize that. Well, where are those banks now? I'm pretty sure they're gone and dead. And credit unions that didn't prioritize that, same thing. So in the same way that mobile banking revolutionized finance for consumers 25 years ago, now you're going to see this technology revolutionizing the credit union space. And of course the banks will follow, but I see the credit unions as the leader with this technology. And it's not just the technology, but it's the vision. And I think the vision is empowering our communities, our families. We want the opportunity, and the opportunity is here with decentralized finance and with digital assets, but you need a safe space to do it. And you don't need 300 coins. You don't need all of this junk. You just probably need about like 10 or so that are what they call the blue chip assets. Maybe there's, something new that appears every now and then, but you don't want to see like a new asset every 30 minutes or something. It's probably not realistic. So, when people ask me if they want to get in, what should I do with crypto? I send them some Doge. I send them, I get them slowly acquainted, but I've used the Metal Pay app in the past, and now I'm excited to say, oh, which credit union do you use? And you'll be able to log in, and underneath the hood, you'll be using DaLand and Metallicus's technology, and it's going to be a great experience. I told my grandfather, who's over 90 years old, what I was doing, and he said, "This is great. I want to see the day that I can keep my Bitcoin inside of the credit union." And that would be a game changer, in my opinion.
See, you said two words in there, Marshall, that I think is what a lot of consumers / members are looking for: safe space. And they want to have a safe space to use this type of stuff because of all the crazy stories that they've heard out there, on the internet. So I think that's a big one. And Jon, same question to you. I mean, next steps for you guys, and how do we get going with this? Because it sounds like we need to do this yesterday.
Yeah, well, what you're going to see coming next from DaLand is more of what we've been doing for the last 5 years. We're already supporting 7 of those top 10 blue chip assets that Marshall talked about. So what that means is we can already plug credit unions into 90+% of the market cap out there in those blue chip proven use case reputable digital assets that most members are trading in. What else I think is coming? I think we're going to see more regulatory clarity. I think we're going to see more legislation. But what I see all of that doing is driving digital assets closer to banking institutions, towards financial institutions. Politicians, bureaucrats, they want to keep their own jobs. Their jobs right now are regulating these institutions. So it behooves the establishment to drive these new forms of money to the existing money institutions. Now, I'm sure that here's what will happen. If credit unions don't get plugged into that future of money and incorporate this type of money into their operations, then I'm sure JP Morgan and others and, Wells Fargo, Chase, Bank of America, they'll be glad to gobble up market share and service digital for the 21st century, service wealth for the 21st century. So as regulation and legislation develop and become clearer federally and at the state level and global level, it's really important for local FIs to be proactive about getting plugged into this gateway and into these new types of money, so that protecting their place in the stream of money. Here's what I mean by that. The next thing that we'll see coming is the digital asset space is going to erode your interchange income.
That's what I've heard.
If you're a local financial institution out there and you make money off of plastic cards, hypothetically, that interchange income is a significant portion of your non-interest income or your operating income. If it's how you're staying alive, I can almost guarantee you that by January of 2026, you will see major moves and announcements and plays by merchant processors and other large out there where they will adopt digital asset payments, they will adopt stablecoin payments, they will adopt Bitcoin payments, because it will have a significant impact on their operating costs, and they will incentivize consumers to move away from traditional payment mechanisms that are slower, more expensive, and less secure. So come downstream, more legislation, more regulation, driving the consumers into these spaces vis-a-vis FIs, and probably some disruption and challenges to payments. The good news is, through our bridge and gateway in partnership with Metallicus, we can make sure that your deposit dollars don't have to leave your FI.
Yeah.
You stay a funding source in the payment stream and the transaction stream, and you can maintain wealth and share of wallet and continue to serve the community even as money morphs in the way that other services did when they bumped into the internet in the past.
Yeah.
So that's what we see coming, and we're committed to ensuring the industry has a solid set of tools, the best set of tools, and a ready gateway, a functioning gateway. And I think another thing is, this is real. We've built this, it's functioning, it's live, it works.
Cool.
Another thing you're going to see coming is a lot of people announcing plans and promises, which is where we're excited to already have products and solutions that are turnkey for shops trying to solve these problems right now.
All right, last question for you guys, because I know you probably have a lot on your plate. I don't want to keep you too much longer, but with all due respect to the credit unions out there, how do we light a fire under credit unions to act? John?
Oh man, I probably wouldn't have asked me that question first, but I would have let Marshall be more polite and polished. I would say point blank, hassle your advocates, pound the doors and phone lines and email inboxes of your regulators. Help them understand the data, interrogate your data in your credit union. Like I said, we're very consistently seeing now that once we help credit unions know where to look, they're seeing anywhere between 3 to 6% of their deposits flowing out of their institution monthly.
Enough incentive for me to see that. Once I see that, that's
right. So when you see that as an FI executive, that should be incentive to pound the email inboxes, phone lines, and doors of your regulators, advocates, legislators, and demand that they keep you in a position to be plugged into the future of money. We'll take care of the wizardry around how to do that securely and responsibly and cost effectively, but certainly FIs push their state agents and entities to keep them in the money business, and we'll make sure the technology is there to allow them to do that cost effectively and efficiently.
Sounds good. Marshall, I'll let you have the final word here. The polite response from...
So I think John put it perfect. From my perspective, I see two angles for this. One is the credit union executive and those internally inside the credit union space. And really that is to look at the deposit outflows, like John mentioned. So these are different crypto apps. You see the money coming out of the credit union. It's not coming. Those are neobanks that have their own cards and the whole platform, and they're incentivized to try and keep you inside this loop. But most of those neobanks and platforms, they're usually riding on like some smaller bank or something like that. What I think that where this opportunity is for the executives in credit union space, look at the outflows and realize that doesn't have to be the case. And in fact, not only that, but you can flip the switch where all of a sudden not only are the outflows stopping, but now the inflows are coming. Trillions of dollars of inflows are coming, and the credit unions are going to lead this space. I've been very good at predicting these things in the crypto space, and I can very clearly see how the credit unions play a very important role in it. So I think some of the players in the space are looking at it and thinking, well, this is great for stopping outflows. But one of the things you may be missing is that the crypto space has been unbanked for years. They have been not only unbanked, but they have been persecuted. They have been given a very hard time. They've been routinely debanked. And so now when the credit union space opens its arms to the industry, especially for the consumers, Wells Fargo didn't even allow people to buy crypto. JP Morgan didn't allow people to buy crypto. They would close your account. And now all of a sudden they've changed their tune. Well, I think we should put our money with our local communities, with our credit unions, and we should bring it back. I keep saying that during this interview, but I think that is super important. It's not just the technology, but the vision. And when you're working inside the credit union space, realize that this is not just about deposit outflows, which you should be concerned about. That's something that you don't want to lose, because if that happens, that could put the credit union at risk. But there is a whole generation, it's really generational. It's not just Gen Z, Gen Y, millennials, but every generation. If you give them a safe and easy place to do it, trillions of dollars are going to come in. It's not just retention, but it's bringing it in. And from the consumer angle, you need to ask your local credit union, are you integrating Metallicus and DaLand? When can I buy and store my crypto with you guys? Because I want to use this platform. The days of having a hardware wallet and putting that under your pillow are going to be gone. And I'm not saying that self-custody is not important. It is. But at the same time, you do need the institution to be able to support your digital assets. I think, imagine if you use a bank and everything had to be in cash. That would be a terrifying experience. And that's kind of the experience a lot of crypto people have been living in when they were debanked. And so now that we're finally being banked, we're not going to Wells Fargo. We're going to the credit unions. We're going to small banks. We're going to institutions. What Jon and I are building is really for the 4,000, almost 5,000 other credit unions and banks. It's not just the top 4, but it's for all of these other guys. And really, what we're building is not just a technology, but a revolution in money to empower people. And I think that is really at the heart of what we're talking about here. And I think it's so exciting because sometimes people focus on the technology, look at AI and other areas. Wow, it's really exciting. But how is it going to empower me in my life? How is it going to change my life for the better? And that's the vision that we're building together.
Love it. Revolutionizing money to empower the people. I love it. I love it, guys. All right. This is the future right here. The opportunity is right in front of us. So let's grab it while we can. So, gentlemen, thank you so much for coming on today. And we got way more than we bargained for. So thank you so much. Appreciate it. And we'll be watching this partnership very, very closely and look forward to having you guys back on down the road. Thank you again.
Sounds good. Thanks, Michael.
Thanks again for having us.
A quick word from our sponsor, Community Financial's President CEO Tansley Stern's new podcast, Despite Impossible.
93% of companies are reevaluating their contact center technology because legacy solutions no longer work. Glia isn't just fixing old problems, we're creating new possibilities for the AI era.